Anglo is now looking very cheap, and what you say about the copper is right, but Anglo has got very cheap relative to the rest of the space, and I'm just wondering, therefore, this is a kind of isolated opportunity.
Yeah, we want to see where this one goes at the open. Not a huge amount of premium, as we said, so we'll probably get some upside, but how much? Will others come in to bid for this asset? We'll see if there's any other interest here. So many others reporting today, as Guy said. I wonder if these markets are just a little stunned in the face of so many corporate earnings stories, plus the tech themes of yesterday coming out of the United States, plus the M&A. There's a lot to deal with. European equity markets then opening. The FTSE 100 is up by 0.2%, so we see a little bit of a move higher there. The DAX is flat so far, so net so far moving nowhere on the stock 600, but in its early days, we'll wait for some movement. We haven't talked about all the stocks reporting this morning. It's just not possible. I was drawn to the BASF news earlier on as well, because chemicals, I know, Guy, we often talk about how you want to keep across that story. The numbers beating estimates, it seems, but saying that they can't confirm turnaround in the chemicals industry just yet. You wonder where that sector goes during this earnings story.
The numbers from WACA are also quite good, but they have beaten expectations, but they are still, if you take a look and widen the lens, they're not great numbers. So they're kind of relative to where we thought they would be. Yes, they look good, but actually in the kind of the big scheme of things, as you say, the turnaround in maybe that sector has yet to appear. Nestle is getting hit pretty hard this morning. ASML is down pretty hard as well. I wonder if that's a read across from STM and BE. So that's coming into that space. You are seeing the kind of the tech sector broadly across Europe under pressure. The real standout story, AstraZeneca. AstraZeneca is lifting the FTSE 100 this morning. It is the biggest points gain on the stock 600. It's up by 5.5%, nearly 6% this morning. Unilever hot on its heels.
Barclays as well, higher by about 2.2% this morning. We had, of course, had Venkat earlier on the show. We are watching BHP and Anglo as well. It doesn't look like Anglo is open just yet, but BHP is under some pressure this morning. So, of course, we're going to watch and see if it's that class of M&A trade, how Anglo responds to it, and how close you get to that premium.
It does seem as if all of these themes are adding up to a bit of London outperformance today. There's AstraZeneca lifting the drug sector. There's Barclays with a bit more US exposure helping the trading side. That helps it stand out on the banking space, maybe. The Unilever numbers, the M&A in the mining space, all of these themes coming together in London, and we are up by 0.6% on the FTSE 100, whereas the rest of Europe does look a little flatter.
In terms of the luxury sector, it looks like the MS numbers are being well received. We'll talk about these in a moment. That is giving a little bit of a boost to the likes of LVMH this morning. It's interesting to see L'Oreal also kind of picking up on the back of that. The other bank I would just mention is Sabadell. That looks like it's had a fairly solid set of numbers. That stock is up by over 7%. So some mixed performances coming through in the banking space this morning, but broadly, in aggregate, probably a little bit more positive there. Some real differences emerging in terms of what we're seeing here. Chips are definitely down. Tech is under pressure this morning. You've got some kind of real divergence within the consumer space between Unilever and Nestle. Nestle's down 3.2%. That's the biggest drag in Europe. Unilever up by 3.86%. That's the second biggest gainer in terms of points here in Europe.
Still waiting for Anglo American to open up, even without that, basic resources is the best performing sector in Europe today. So we'll see where that one goes. But it's mostly the paper companies at the moment.
Certainly something to watch. I'm going to bring it back to what Guy was talking about with the banks, because you're seeing some real divergence in terms of how, say, for example, Deutsche Bank versus BNP, for example, has actually approached their fixed income business. We actually asked the CEO of Barclays as well how the rate volatility is affecting their bottom line. Take a listen to what he had to say.
As far as net interest income goes, you know, the rates markets have been volatile. There's been a round trip approximately of 90 basis points down, 90 basis points back up in the 10-year gilt in the UK, and roughly the same numbers in the US. And so It is very early. Our numbers are in line with what we said. We've seen deposit growth. We've seen lending growth in mortgages and in credit. And so we're pleased with that. But it's one quarter in a longer journey of 3 years.
The CEO of Barclays there talking to us a little bit about that rate volatility. Let's get more on that. Tom Metcalf, our EMEA Finance Investing Managing Editor, joins us this morning. The key theme seems to be this rate story, weakness in FICC results, except for Deutsche Bank. Is this a one-off?
Yeah, I think it's really interesting as you look across between Deutsche and Barclays. Like Deutsche Bank's fixed rate traders did very, very well. I think up something like 7%. As Venkat was just saying there, it was sort of a bit of a middling quarter, I suppose, for the rates traders at Barclays. But for me, the interesting thing is you look at the Barclays share price, up a couple of percent, as you were saying. And I think that speaks to, what investors are looking out for Barclays. The investment bank's obviously a big piece of this, but it's not the be-all and end-all. And they're probably pretty happy with what, as Venkat was saying, looks like a delivery on those expectations they set out at that strategy update.
What are the differences between the European banks that are obvious from this set of numbers? Can I aggregate them together? This is a sector that's done really well so far this year. It's the big outperforming sector so far. Yeah. But where's the nuance within this set of numbers, from Sabadell to Barclays to what we're seeing this morning from BNP to Deutsche? Where does if I'm stock picking within the sector, what am I looking for this morning to determine kind of how I see the differences between the banks?
Well, I think in some ways you just look at the domestic markets, right? Like, a Barclays versus a Deutsche Bank, and ultimately maybe the difference there is your view on each of those countries. And that's the fascinating thing is, within Europe there is such a divergence sometimes between the banks. Like, as I say, Deutsche Bank probably will be going home very merry, but they've got this particular strategy they're trying to execute on.
House bank, yeah.
Yeah, exactly. So it's always the way, I guess, in Europe.
So it's geography rather than business model that is determining kind of how the market sees these stocks?
I think sometimes, because obviously NIM is such a big part of what everyone's thinking about.
Right.
So, yeah, and that's the tricky thing with an investment bank. Trying to sort of value that as a shareholder is really hard because, it's a bit of a black box. Why did Deutsche Bank do so well this quarter compared to Barclays? You don't know. And as Venkat was saying, it's very difficult on a quarter-by-quarter basis to judge an investment bank. It's sort of that longer-term view. But obviously, when you see the ups and downs per quarter, it's easy to get caught up in that, which is why you have that pressure on Barclays to be like, we actually don't want you to be viewed as an investment bank heavy institution. We really want that risk-weighted assets to come down.
He could be pleased then with the amount of time we spent talking about net interest margin, and we heard him there referencing the round trip we've been on in UK rates and how that might play out for the business. It's interesting to think about, we heard from Lloyds yesterday, which their story was one of NIM coming under pressure because customers were shopping around and looking for better deals on their savings. And, the longer we're in a higher rates environment, the more that might happen, one assumes.
Yeah, exactly. And, it comes down on the retail side, just execution on that retail side of things, which is, often doesn't get the headlines, but can you deliver that customer experience? Can you sort of stand out from the pack without necessarily just relying on a higher interest rate to bring people in? But yeah, I mean, that is going to be the big thing in this rate environment is how much of that margin can the bank sustain? And also, who is kind of getting more of a market share than others?
Deals also in focus this morning, something we also talked to Venkat about, something the bankers might be pleased to see with this big mining deal perhaps going through. Tom, thank you very much. Thanks for joining us. Tom Metcalf there with the latest on the banking sector. And talking of those deals, Anglo-American shares then on the rise this morning, jumping 11% out of the gates this morning, reflecting that BHP offer that we've seen for the business, jumping to 24.60. So perhaps a little bit of execution risk being priced in there as the offer around 25.08.
I'm interested to see Immerse is a little softer this morning. It's kind of the bottom end of the CAC, not bottom end of the CAC, but it's in terms of points, the third leading loss in terms of what we're seeing from the luxury sector. It's interesting that other names are actually doing slightly better. In terms of what the company has come out, actually, the sales story in China doesn't look quite so bad. It does look as if there maybe has been a little bit of trading down, but it's also talking about the fact that it's not planning further price hikes for the rest of 2024, which maybe says something about how maybe the market is evolving here. How should we be reading this? Well, let's get a take from our luxury correspondent, Angelina Rasquer, who joins us from Paris. Talk me through what is happening. The top-line numbers, the sales line, the revenue line, looks really strong. The market's taking a more cautious approach. So why are we seeing the cautious approach when we've seen such a strong top line here?
Hi, Guy. Yes, indeed. I mean, if you look at all the geographies, they grew by double digits in all the regions. And crucially, in the Asia-Pacific, excluding Japan, they grew by 14%. However, the CFO, in a call with reporters, he said that traffic was a little bit softer after the Chinese New Year, so that was in March. But he said that this softer traffic was compensated by basically higher average baskets. So the customers would typically have maybe purchased more affordable products like silk scarves or beauty and perfume weren't so present. However, they seem to have done really well with customers who were buying more expensive items, leather goods, ready to wear, and jewelry. So that compensated potentially a softer demand in the sort of more entry-level categories there.
And talk to us a bit more about China then, because we spent a lot of time over recent weeks talking about the weakness of Gucci at Kering and their struggles in China. What's the difference in the stories here?
I mean, China has been a tricky market so far this year, and it's really we see a divergence, a polarization between the more exclusive brands and the less so, and that's what the Kering CFO told us this week. She says that the Gucci, the label, unfortunately is located in the middle, so it's not benefiting from this polarization in the market. And on the other side, you have a label like Hermès, which is at the top of the luxury pyramid, maybe up there with Rolex, and they have this supply constrained model. So that's what we're seeing right now, that those who control their supply and therefore their pricing are in a better position than perhaps brands like Gucci, who are perceived to be more in the middle.
Don't want to be in the middle. Angelina, thank you very much indeed. Angelina Rasque joining us on what we've seen out of Hermès this morning. Let's talk about what we're seeing in the core six this morning. Some divergence. It's really interesting. You've had a series of numbers out this morning. Look at Schneider doing very well as the market marks that stock up by over 1%. Look at Nestlé. Nestlé's getting hit hard in Vevey this morning. ASML is also coming under weakness. There's chip weakness this morning more broadly. Novo also showing signs of weakness. LVMH turning around a little bit. So LVMH now a little softer, down by 0.4%. Schneider's an interesting story, and the numbers this morning may be confirming its place in the kind of the AI narrative as well. There are many stocks this morning that you want to be paying attention to. I don't know how Joe Easton's whittling it down, but he has done, or maybe he's just going to take the rest of the show and kind of talk about all the names. Joe, what do you got?
So it's going to be a tough one, Guy, but we've got to start with Anglo-American because that move there, 13%. It's a huge move, the biggest move we've got today. As Anna mentioned earlier, though, it is trading below the potential offer price. Now, the other thing to note is there's a good note from BI this morning, so there would be antitrust concerns around this, given these two copper giants potentially merging. So that bid coming from BHP overnight, that prelim bid, we've actually bought up the secondary listing of BHP in London. The main listing is on Australia, but we can see that declining 3.7% at the moment. But the big move is Anglo-American, up 13%. Not seeing a huge read across in the peers at the moment, but we're keeping an eye. Could there be a rival bid? Could it then shine the light on some lower valuations of these UK miners, which really are much cheaper than their global peers at the moment? Then we're going to move over to chips, because it is a nasty day over there. ST Micro coming down 4%, BE Semi down 6% as well, and all the peers moving lower. Infineon, ASML and ASMI as well, that one down 1%. ST Micro and BE Semi both giving sales warnings on the same day. ST Micro mostly related to the auto space, auto chips, EVs, that kind of thing. BE Semi is a chip manufacturing firm. These really coming out of the blue and weighing on the tech space this morning. We're going to look, though, at a couple of those consumer health stocks that we've got. So we've got Unilever. Those ones are rising around 4% at the moment. All the focus is on the ice cream demerger, potential IPO of that. Will that go? Will it be London? Will it be Amsterdam? But for the moment, the sales looking pretty strong across the space. Nestle, though, the big decline in North American consumers not buying enough, potentially not buying enough Nespresso, all the other products from them as well. It does look like North America is the weak one over there. And we've got another drinks warning. This one, again, is Pernod Ricard warning on sales. This is related mostly to their China sales in cognac. However, we have had a number of warnings out of those recently, including Diageo, Remy, all of those peers. It's potentially that price in, only down 1%. But take a look at AstraZeneca, up 5%, a big move for that stock. The oncology powerhouse here in the UK continuing to push on, showing strength in their cancer drugs this morning, and that is a big mover in terms of that one. We'll just flip over and look at the banks. Was expecting to see some volatility in the Spanish ones, given potentially Pedro Sanchez looking to maybe resign. That breaking news last night. But the other thing is we had strong numbers out of Banco Sabadell last night, and they are this morning as well. Some analysts saying that potentially the net interest margins over there are better than expected at the moment. Barclays getting a decent gain following strength in their trading business, but the weak one is Deutsche Bank, down 2.5%. Analysts are saying the capital and also the NIMs, the net interest margins, potentially not as strong as expected. Not too much movement in BNP, little gain for that one in Paris. Deutsche Bank, though, standing out, down 2.5% over in Germany, following that weak capital and net interest margins from the German lender.
All right, Joe Easton from our equities team, we thank you so much for walking us through those crucial stories. Coming up, we continue the market conversation with LGIM's Chief Investment Officer, Sonia Loud. That conversation next. This is Bloomberg.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Could face bigger challenges next.
Was going to keep rating World Cup. This is a 3.
As the economic picture does. The OK is getting ready to make.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
this is more of a fundamentals play, because you look at the balance sheets, the profit statements of these companies. They are attractive companies. They should, you probably don't want to own 30% of them in your index, right? But owning all of them, I think, is a good idea.
That's Kuei Wen, CIO for Equity Strategies at Research Affiliates, speaking to this program just yesterday, talking about tech names, big tech names, and the extent to which you want exposure to those. Let's get another view. Sonia Loud joins us, CIO of Legal and General Investment Management, with us on set this morning. Sonia, very good morning. So we'll get to some of the European earnings themes, if you like, in a bit. But in terms of the stateside mood, of course, we had real weakness after hours in the Meta numbers. I see the NASDAQ futures down by 1.2% right now. So it seems as if that's going to be something of a theme as we work through the day. There are specifics around one business, but broadly speaking, your thoughts on the tech earnings story that we've had so far?
I probably would phrase it slightly differently, not just on tech earnings, but just taking a step back to make sure that we are, capturing the signal versus the noise. Because on a day like this, you can get drowned in the headlines and the earnings reactions.
Yes, that's where we are.
And so it's always important to understand what's been the run-up to the earnings season, what's been the expectation built into the earnings season. And it's very clear for tech stocks in particular. Look on the one-year performance. It's been a huge run-up based, obviously, on the wonderful expectation how AI will change the business environment, will obviously drive tech earnings. And don't get me wrong, the earnings profile has been strong. But if you then look at the valuation level, you see that we've probably gone quite a bit ahead on extrapolating that this will be a very smooth line going forward and that there's no bump in the road. And I think we're just hitting a little bit of a reality check. This doesn't take away the excitement around the potential for going forward, but it's probably valuation coming back to a more realistic pathway forward.
Okay, so we're getting a reality check on tech over in the United States. Here in Europe, we've got so many themes going on with the earnings stories, as you mentioned. So let's take one at a time, I suppose. I was looking at numbers out of the chemical sector. Big players there saying you can't call that we've turned a corner on big, chemicals and the chemical sector just yet. What are you looking for from that kind of sector? Because it's often watched as really crucial to telling us about the broader industry. But a lot of the growth out of Europe, any recovery has been in services, not manufacturing of late. So what signal do you get there?
Yes, and this is where you really want to have the reality check with the fundamentals. Where are we in terms of our expectation for the economic growth? You rightly pointed out we've had more positive news from the services sector rather than manufacturing. This was reconfirmed with a PMI story in Europe yesterday, and so not necessarily surprising that the news flow out of companies would match this. And now for the large global manufacturing companies and chemicals in particular, you would look towards China as well. And again, looking at fundamentals, what's the story there? And as such, you have to look really regionally and fundamentally what's driving the relevant pieces of the jigsaw.
Sonia, is it too early to price in election risk in the U.S.?
We are always very mindful to price in any election risk, because at the end of the day, you will have noise, you will have volatility, you will have loads of emotive headlines. That's a given. But at the end of the day, for investors, what is it really that influences the trajectory of growth, inflation, monetary policy? Because that really gives you the trajectory that you really should focus on. And I don't think, if you really look back in history, ignore the noise. There will be lots on the day and clearly in the run-up. But what really is influencing is more the themes. We would look at fiscal in particular, because this clearly is an area that has helped the U.S. economy a lot over the past year or two. And the question really is how much wiggle room is there? How much can the two parties and hence the president do after the election?
So you say you price that in. What does price that in actually look like? Is there a specific asset you're watching?
Yeah, of course, you would definitely watch the long end of the curve, right? Because if you consider fiscal sustainability and where we are, where the fiscal deficit right now is, you look at some of the expectations, some of the headlines, and we haven't got all the details yet, but you will expect that the market will take note. There's no term premium whatsoever right now, so you have to wonder whether there is a steepening of the curve in the run-up and potentially afterwards, simply because of the dynamics in the fiscal policy.
The FTSE 100 is trying to catch up with its peers. It started. Does it carry on? Is it something that's sustainable? What gets it there?
I would look at the individual companies rather than the FTSE. We know that, yes, we look at it from a country backdrop, but at the end of the day, you know it as well as I. This is the individual companies, their positioning globally that drives the earnings, and I think today's news really supports.
Well, let's talk about today's news. Is it a reflection of what's happening at Anglo? Is it a reflection of cheap valuations in London? Is this something that we could see replicated? How many companies could leave? How many companies could be taken over?
If you just look at the stories today, it's clearly strength of earnings and a takeover situation.
Astra looks really strong.
But Astra is a global company. The strength of their portfolio is obviously what's driving this, and their customer base is global. And as such, this is not related to the UK fundamentals. And that's been a story we've had for a long period of time, right? The attractiveness of a marketplace is a set of input factors, and a company will always look at all the factors before deciding whether this is the best location for them to set up headquarters and to strive. And clearly, a company like Astra, with a global customer base, seems to be striving here. But that has to be the ambition, that you have the best backdrop to enable companies to do exactly this.
Yeah, and that's one CEO who's usually quite vocal about what he wants to see in terms of regulatory backdrop and tax and all the rest. I mean, M&A, another big theme in London today within the mining sector. Those with long memories will remember we've been through big waves of M&A 10, 15 years ago in the mining sector. And the lesson from that was investors said, no, we don't want you to do that anymore. We want you to stop doing that. We want you to throw off cash. Now, are we ready? Are investors ready to go back to another period of M&A in the mining space?
I don't think those episodes are necessarily comparable because the narrative has changed completely, right? And we know that the rationale for why we might see the approach today has very much to do with the way how metals and mining are used, and electrification is the big one here, right? And we know that the demand for copper in particular is very much linked to the electrification story. And I think this is why I'm always mindful. Yes, history is a good guide, but the logic and the narrative is a very different one, and probably will be looked at differently in that context, because you're looking at mining companies and the assets they own differently in the context of a very changed demand pattern compared to 10
So copper's not what it was then?
No, in a way, because if you consider the demand, and we have all those studies pointing towards the incredible demand that will arise for these metals, it is a different story.
Can I, just before we quickly wraps this up, is Anglo attractive because it's listed in London and therefore trades at a discount?
No, it's attractive because of its assets and the potential you have in using these in a context where there's massive demand for.
Okay.
All right.
Sorry.
Sonia Loud. No, it's okay. It's an important question. CIO of Legal and General Investment Management. We thank you so much for that crucial context. It's a really interesting dynamic as we talk about the deal flow in the mining space, not just for Anglo American and BHP, but is this, to your point, a one-off or a sector-broad story?
Everybody's going to want copper. That seems to be the narrative. That's what Sonia's saying as well.
Yeah.
It's going to be... It's where do you get it? Do you have to dig it out of the ground? That's hard. Or do you go and buy it on the stock market?
Yeah,
that's easier.
Antofagasta, another stock that was trading higher this morning. There's another sort of read across from this M&A story. There are other macro themes, aren't there? There's what's going on in Japan as well, also in focus. Coming up, plenty of focus on the weak yen. We're back through 155 again, folks, as we look ahead to tomorrow's Bank of Japan decision. The expectation is we don't get any change in rates from the Bank of Japan, although some analysts pointing out that would be something that might support the currency if they are very concerned about that. A lot of verbal intervention still, but will we actually see some intervention once again from the central bank, from the Ministry of Finance? We'll get to that Japanese conversation shortly. This is Bloomberg.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. and they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
World of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordeurn every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Welcome back. 30 minutes into the equity day here in Europe. We are facing something of a signal to noise challenge this morning. So many corporate results. How do we digest them all? To be honest, equity markets aren't going anywhere in a hurry. We are down broadly across Europe, with the exception of the FTSE 100, which seems to be doing a little bit better. Interestingly enough, the IBEX is actually positive this morning. I think that's probably got to do with Sabadell, and less maybe to do with what we're seeing in terms of the politics. There's some big names out there that you want to be watching in terms of the numbers that we've seen, though, so far this morning. Broadly, actually, though, you would probably say the net story is quite positive. Some of this is M&A, so Anglo's up by 10%. You've got AstraZeneca on the back of its numbers. We saw the CFO on our set a little bit earlier on. Broad brush story there. Unilever's having a good day. Barclays is having a good day. It's interesting to see what is happening with the chip space, though, on the right-hand side of your screen. The banks are doing okay. The pharma space is doing it's more mixed, but the chip space, the tech sector today, is where the weakness, Anna, is coming through on both sides of the Atlantic. The Nasdaq is kind of pitched to be quite a lot lower this morning.
Yeah, absolutely. So looking to pick up on that theme stateside later on today, Nasdaq futures down by 1.25%. One of the big macro things we are also watching closely this week, and this time tomorrow we'll have the answers to the questions we're about to ask, is all around the BOJ and Japanese response to weak currency. Japanese stocks are lower today, with the yen extending losses in the lead up to tomorrow's BOJ decision. This after the currency weakened beyond 155 per dollar for the first time in more than 3 decades. It happened yesterday, it keeps happening this morning, keeps getting weaker. I think this is the first time since 1990 we've been to these 155 levels. Let's get to you, Bamba, who joins us now, head of active investments for Japan at BlackRock. So very nice to have you with us. Let me ask you about what you're expecting then in terms of intervention. If we deal with that first, hard to maybe have a conversation in isolation about intervention without thinking about what the BOJ does in its meeting. But what are your thoughts on what will trigger intervention this time around?
Yeah, nice to be here. What will trigger intervention this time around? I do think you take the intervention question separately from the BOJ. What the BOJ does is going to be separate from any one-time intervention that the government may or may not decide to do. We don't have particular insights on whether or not the government will do intervention. We think it's entirely possible, But I do think it's important to separate that from what the BOJ is going to focus on doing tomorrow and in their monetary policy decisions, which is to support the Japanese economy and to make sure that the exit from deflation sustains itself. So we think that that's the focus of the BOJ and not so much the currency.
Does supporting the Japanese economy, does that rely on, supporting the economy, does it rely on supporting the currency? Is the yen weakness so weak that, maybe we consider a surprise hike from the BOJ, for example, tomorrow? That would be one way to support the currency.
Yeah, no, absolutely. I think supporting the Japanese economy is going to entail primarily maintaining accommodative monetary policy conditions. So the BOJ, we know, is on a path towards normalizing interest rates or monetary policy. They had the mid-big meeting back in March to pull out of a lot of the extraordinary policies that they put in place, like negative interest rates and yield curve control, and they're on a path towards normalizing things. But they just want to make sure that they're doing that in a gradual fashion and not rush into things to tighten monetary conditions too much, to slow down this the momentum that we're seeing in the economy. And I think that that's their first priority, and addressing the situation on the FX market is at best secondary.
Who's in control of what is happening with the yen right now? Is it the BOJ, the Ministry of Finance, or is it the Federal Reserve in the United States?
Yeah, that's a great question. I think that the yen, the FX, ultimately is going to be driven by interest rate differentials. The government can come in and do intervention, and that'll move the market, for a little while. But that's not really going to be the determinant of FX. Longer term, as the Bank of Japan normalizes interest rates and interest rates go up in Japan, and as the Fed hopefully at some point starts to cut interest rates, the interest rate differential will start to normalize, and with that, the effects should begin to stabilize and turn.
Which is the most important cross rate that we should look at for the Japanese economy? We always focus on dollar yen, but is it dollar yuan? Is that the key thing that we should be watching here? And we should think about how the Chinese are watching what is happening here too. Is it what's happening with Korea? How do I think about this globally and regionally, and the effects that these various kind of cross rates have in terms of the overall basket?
Yeah, I think dollar yen is the right one to look at and to focus on from a fundamental perspective. The majority of the trade that happens in Japan is going to be denominated or keyed off of the dollar. So fundamentally, that is the right pair to look at. And also from a markets perspective, it's absolutely the dollar yen that gets the attention of markets and controls sentiment. So yeah, I think we should look at dollar yen, and that's the appropriate one to look at.
You said that for the BOJ, the currency should be a secondary consideration. They shouldn't want to tighten conditions too much to prematurely slow down the economy. What are you, in terms of what does trigger any intervention then, if we go back to that conversation, it won't be a level. They like to say it's not about the level, it's maybe about the speed of change. So what do you think would trigger intervention?
Yeah, it's the level, it's the speed of change, it's the buildup of speculative positions. I think from a level and a speed of change perspective, we may already be at areas that justify or that motivates the government to come in and intervene. So I think it's entirely possible. And then also I would add that alarms, feeling of alarm and anxiety over the effects is starting to mount gradually within Japan as well, impacts to cost of living and so on and so forth. So it wouldn't be a surprise at all to us if the government chooses to come in and intervene. But again, I don't think that that's necessarily what the Bank of Japan is focused on right now. The Bank of Japan is focused on the economy and the fact that they implemented some big changes to monetary policy at last meeting, and the fact that that was taken, quite well by the markets. There were no major disruptions or, liquidity events or vol events in the markets. So they must be pleased about that. And they must also be pleased about the progress in wage growth and, momentum within the domestic economy. And so I think that's what they see, and that's what they're focused on. That calls for, gradual normalization of monetary policy, of interest rate hikes, which is positive. It's positive for savers. It's positive for the financial economy. So I think that's where most of the focus will be.
And if you were going to intervene, when would you do it? We've got key data out of the United States. So we've got, GDP data, PCE data. These all threaten to move dollar-yen, could move them in a direction that weakens the currency even further. And, of course, we have the BOJ. What would be the thinking about when that intervention would take place?
Yeah, I'm not necessarily in the heads of, the government officials that make these decisions. I think they just obviously want to do it when it's, most effective, and they can do it over, a number of times as well. It's not a one and done thing. Yeah, I mean, and again, I don't think it needs to be tied at all around the BOJ event. So I would, sort of separate the two.
Yeah, how much political pressure is there for a stronger currency? We were talking to an analyst the other day who was kind of joking how cheap a beer is in Tokyo versus a beer in Mayfair here in London. And there does seem to be the sense that you see a lot of foreigners turning up in Japan, spending a lot of money, and the local community, there's a certain amount of resentment around this. Is there pressure, domestic pressure, to have a stronger currency at this point? How strong do you think that pressure is? I'm trying to understand, as you say, the motivation to generate that intervention.
Yeah, I don't necessarily think that there's a ton of resentment in the tourism that we're getting. We think it's great. Hotel prices have gone up and restaurant prices have gone up as a result of tourists. But I think, the general mood in Japan is quite positive. It's quite positive about, the stock market doing so well. It's quite positive about wage growth being so strong. It's quite positive about CapEx being at all-time highs. Generally, the exit from deflation has been a big positive for sentiment. So I think that generally we're feeling good about things, and we are feeling hopeful about where things are headed. Is there some political pressure around the currency? Yeah, there may be some, and I think we would all like, the government as well as the private sector would like to see the yen stabilize and be a little bit stronger. But I don't think that should sort of take away from all the positives that are going on in Japan, and that's more of the dominant theme in the business community as well as, at government, I think.
Yi, great to catch up. We're going to wait, we're going to watch. Next 24 hours are going to be absolutely fascinating. Yi Bamba, head of active investments for Japan, joining us from BlackRock. Coming up, we're going to get back to that big mining story. BHP making that unsolicited takeover bid to rival Anglo American. We're going to discuss what could be the biggest shakeup in the mining industry in over a decade. It's a big deal. Will it happen? That's next. This is Bloomberg.
Capital. It's been volatile. From Bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back. This is Markets Today, 8:44 in London, so 44 minutes into a European equity market session that sets London apart to some degree. The FTSE 100 up by 0.5%. A lot of the earnings stories and some of the M&A news playing in London's favour this morning. Elsewhere, we have some weakness on the CAC and the DAX. Both of those are down. Now, the world's largest mining company, talking of M&A, BHP, has made a takeover approach for rival Anglo American. Anglo American confirmed the proposal after Bloomberg first reported that the bid was in the works. If successful, the takeover would represent the first mega deal among the world's biggest miners in over a decade. Let's get more on this story now. Bloomberg Senior Executive Editor for Energy and Commodities, Will Kennedy, joins us now. Will, thanks so much for joining us. We've talked quite a bit about why this deal is happening and why now. We spoke to Sonia Loud over at LGIM earlier on, and she was saying this isn't because it's London, it's not because it's cheap, this is because of energy transition and the copper assets. Is that the driving force here?
I think that's right. Everyone would like to get their hands on more copper, and BHP are among the companies that would like to do this. If they got this deal done, and it's a complicated deal with many hurdles, but if they got it done, they would control about 10% of the global copper supply and be the biggest supplier. And that positions them very well for a world in which the expectation is the electrification of everything, all those wires and cables that we're going to need, all those electric cars, means that copper demand is going to keep rising at a time when supply is likely to remain constrained.
Well, you say it's complicated. I think you're being polite. There is a significant South African problem that is built into this. Amplats is one part of it. The unions in South Africa are another part of it. The pension fund's another part of it. The government's another part of it. This is a complicated deal. Is that why the premium is maybe as low as it is?
Yes, I mean, I think that people have always seen that Anglo's copper assets are an attractive target, but the reason that it's never happened is because of the complicated structure of Anglo and the rather hodgepodge nature of its assets. You mentioned South Africa, that's the really key one, and it's important to note that BHP have made a divestment of its South African platinum and iron ore businesses a condition of this deal proceeding. Now, the biggest shareholder is the Public Investment Corporation of South Africa, a state investment firm. They will be very protective of South Africa's interests in any deal. And another complicated factor is De Beers, the diamond business, which is probably not key for BHP, but is also partly controlled by the state of Botswana. So there are lots of hurdles. The final one I would mention is antitrust. Now, China has in the past intervened in mining deals. They buy half the world's copper, so are very interested in the map of the global copper industry, and they will probably think that this would give BHP too much control. So there is a South African angle, but there's also an antitrust angle that we need to be aware of here as well.
Okay, so a couple of reasons why this could be complicated. Well, what about other bidders? Do those factors just put off others? Would it make more sense for others to take on this asset, given that BHP's offer seems to be conditional on selling lots of things?
Well, I think that other bidders will have the same problems with Anglo American that BHP have, but there's no doubt that Anglo American's the copper business centered on some world-class assets in Chile would also be of interest to Rio Tinto and perhaps even Glencore, although Glencore has its own deal going on with its bid for some of Teck's assets. Now, again, that would be difficult, but once Anglo is in play, I think it is going to set off a bit of a frenzy within the industry about how it ultimately shakes out and what the shape of the industry is going to be from here.
Thanks, Will. Thanks for the update. Bloomberg Senior Executive Editor for Energy and Commodities on hand for us at just the right moment to talk us through the BHP approach for Anglo American. So certainly M&A is something we're watching today. A host of earnings stories as well. Here's what else we're watching. 12 p.m. UK time, Ukraine and Turkey have rate decisions. 1:30 p.m. London time, US GDP and first quarter for the first quarter, we'll also get jobless claims. We have an international auto show taking place in Beijing, so keep an eye on the auto sector with that in mind. Anthony Blinken is also in China. We have BP and Caring AGMs. Those could show some shareholder activity. And later we get earnings from the likes of Microsoft, Alphabet, Airbus and Intel. So quite a big tech representation. Also the aviation themes. We're going to talk tech in a moment, but aviation also on the list for today.
Anna, yeah, I'm going to be. Anna points to me, kind of, basically.
I said airline.
She basically kind of points to me and goes, plane spotter, you go now. Yeah, I'm going to be talking to Guillaume Faury a little bit later on, which will be interesting. So, in the light of the Boeing numbers yesterday, obviously we need to see what we're going to see from Airbus in the context of that. But Airbus, I think, is interesting in as much as it doesn't have the same challenges maybe that Boeing does right now, but it does have its own challenges, and the supply chain remains really a key area. How far can they ramp up? They've got all this demand that they're seeing at the moment, but they're struggling to ramp up. They've got a Pratt & Whitney engine issue on the 320 platform, which they've got to deal with as well. So it's really interesting that everybody's struggling at the moment to meet the demand that is out there at the moment. I was talking to Michael O'Leary yesterday. He's capacity constrained right now. We're going to see higher airfares this summer because there aren't enough airplanes.
And so the Boeing travails, they matter to Boeing customers. They even matter to non-Boeing customers as well, don't they? As we've discussed with other airlines around Europe. Because if the whole industry is then just affected by a lack of Boeing planes, then that has a knock-on impact on the availability of others over at Airbus. Tech then very much in focus. We talked a little about the Meta numbers. Let's do that in a bit more detail. We've had tech earnings coming through from Meta in particular. A host of reasons as to why this stock really tanked after hours. Let's get more then on these tech earnings with Bloomberg's Alex Webb, who's with us this morning. Alex, I've seen three reasons cited. The sales guidance for the second quarter, underwhelming. CapEx went higher. Spending on the metaverse going higher. All of these three added up to a real sell-off in Meta. Do you think that was overdone?
Well, I think it's pretty clear that if you say that you're going to be spending more money and your revenue is going to be lower, investors are probably going to not take that very well. And don't forget, the stock has really been bid up quite a bit this year. It's made Mark Zuckerberg, I think, second or third richest person in the world, again, as a consequence. But the key thing here is that there is less appetite for long duration stocks right now. And essentially, the message here was, well, this is actually slightly longer duration than you thought. We are pushing out some earnings because we expect AI to deliver in a few years' time. In the current higher interest rate environment, investors are more willing to go, well, in fact, then we don't necessarily need you as much as we thought we did.
So the year of savings, the year of economy is firmly over. Is this... does Meta just struggle with the idea of saving money and not kind of splurging money on the next big shiny thing? Is that the takeaway as well here?
I mean, it's very hard not to be tempted as Facebook management when you've got something like $50 billion in free cash flow to go, well, I'd like to spend some of that money. The thing will be fascinating this year is when they had the prior expansion into reality labs, they call it the metaverse, there was an overexpansion that you really saw average revenue per employee fall significantly. They corrected that to a large extent last year. It was really tough on all the people they had hired, of course, that they had essentially overhired. Now, if they're expanding into this new space now, it'll be a real test of management to see whether they can do so efficiently. Because, you know, sometimes you do need to add headcount. The question is getting it right, making sure you don't add too much headcount given what your needs might be.
Tell us what benefit AI brings to a business like Meta, then, Alex. I was reading a nice opinion piece earlier on today by one of our colleagues, Dave Lee, who was suggesting that sometimes, you know, it's not entirely clear what these big tech businesses should be best doing with some of this AI technology.
Yeah, I mean, look, AI is a very, very broad church in terms of what the technology means. And of course, Meta has been using AI for a very long time in its advertising business, and it has been progressing some of that recently, adding new AI-led advertising features. It also has Lambda, its large language model. Increasingly, some of these companies are seeing large language models as gateways, essentially new platforms, new ways of accessing the internet, so that your future use of the internet becomes a conversation with a chatbot of sorts that then directs you towards the things you need to go to. Facebook clearly wants to be part of that game, and that also then provides an opportunity for licensing, whether you can license that technology elsewhere. Now, it seems very clear Facebook is playing in the first space. It's playing in the advertising space. There is a suspicion that it really wants to play in that second space. What happens in the third one, you know, essentially remains to be seen. But it's partly about ensuring that you are well placed to capitalize on any opportunities that might come.
Are Microsoft and Alphabet, if they outperform, going to be enough to compensate for Tesla and Meta?
I think probably yes. You know, this is what we saw in the last earnings cycle, was that we had quite often people tend to think of these sort of Magnificent Seven, the tech stocks, whatever you want to call them, as a sort of a monolith. They're not. They're all very different companies. We saw last time around Facebook did pretty well. Google didn't do very well. And actually, we didn't see sort of a catastrophic fallout in the broader market because there was a mixed picture. So, you know, Microsoft and Google, they have far bigger market capitalizations than those other two companies. So you would expect then that if they do well, if they outperform or they meet expectations, then it should be enough to assuage any concerns with Facebook. The big challenge really is going to be Apple, looking a bit further ahead, given the challenges that they are facing in China.
Alex, thanks so much. Bloomberg's Alex Webb joining us with the latest on Meta and the wider tech space. This really stood out to me in this piece from Bloomberg Opinion Guy. This was all about, you know, what do these apps exactly do with AI? Yep. And one of our authors saying that when he was searching for an old message on WhatsApp, the AI asked whether he would like to take a moment to generate a humorous illustration of a cat. He didn't. So he skipped that step. I mean, if that's where we are on the AI journey, there's a long way to go.
Yes, that doesn't feel like it's productivity. In fact, it feels like that's anti-productivity.
Exactly.
Taking us in the wrong direction. So we come to the end of the show. We started the show asking the question, kind of, where's the signal in the noise this morning? We've got an awful lot of noise. Where is the signal this morning? And I'm still trying to work that one out. My kind of takeaway this morning is that actually FTSE 100 stocks are doing relatively well here, and maybe this catch-up story on the FTSE 100 maybe therefore has a little bit of momentum this morning. Astra's up, Unilever's up, Anglo's up on its own kind of story, kind of whatever it's doing. The oil stocks are doing relatively well as well. So there's an interesting kind of FTSE outperformance narrative, which I think is worth maybe looking at.
There is, absolutely, up by 0.4% on the FTSE, as the stock 600 is down by 0.3%. And some of those are UK specific a little. I mean, you could say that about some of the Barclays numbers, but there is a global story around Barclays, and there's certainly a global story around the other names that you mentioned. So that's interesting to note. I think it is apt that we actually ended on that conversation about tech, though, because although we've been distracted rightly by all these European earnings, if we look ahead to the US session that's still ahead of us, NASDAQ futures down by 1.1%, and that is the Meta story, and that is the concern around AI this earnings season.
And we're building up to the Fed. That's going to be a big story as well. The earnings are going to continue. The noise will certainly be with you throughout the rest of the day, but we're going to cut through it. Norsk Hydro's CEO is going to be joining us a little later on. I'm going to be speaking to the Airbus CEO. Looking forward to all of that. That wraps things up from us. It's been a busy morning. I hope you've taken some signal away from the noise. Francine is going to carry on the conversation next. The Pulse is up next. This is Bloomberg.
Thank you.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready? Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. And market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Anglo American surges after it's approached with a takeover offer by mining rival BHP in a move that could spark the biggest industry shakeup in a decade. Well, big tech takes a hit as Meta's earnings report actually spooks investors ahead of results from some of the biggest and most important companies. Plus, a really mixed bag of results from some of Europe's biggest banks as earnings ramp up here on the continent. Now, we'll break down the numbers. Also ahead, we'll speak to Ukraine's finance minister as Kyiv gets a $61 billion aid boost from the U.S. But first thing is first, let's take a look at the European markets map. Now, the markets team did a great job in trying to figure out exactly the nuances of some of these earnings. And again, it's playing out at the margins in some of these stock markets. Now, if you look at technology, so this is a picture overall. We're seeing a bit of pressure on the DAX and the CAC. More interesting is actually looking at the sector breakdown and what's going up and what's going down. So technology down some 0.4%, but there is definitely a move downwards because of what we heard from Meta. Once again, Mark Zuckerberg saying, look, if you're going to invest in AI, it's going to take money, it's going to take time, so please, he's asking investors to be patient. Then there's a lot of news in basic resources, not only because we've had some earnings that actually saw a bit of a resurgence, a bit of a boost from China, but of course, we could see these mega deals back on track. Healthcare, I think both AstraZeneca and some of the other rivals beat expectations, and then banks, really a little bit of a mixed bag. We heard also from the Barclays chief executive, so we'll bring you more of that interview. Now, disappointing earnings from Meta have investors on edge ahead of results from Google and Microsoft a little bit later today. Meta shares plunged after its second quarter sales forecast missed estimates, and it announced plans to spend billions more than expected on AI development. Now, the share price just started trading pre-market down 14%, and then the world's largest mining company, BHP, has made a takeover approach for rival Anglo American, a move that could spark the biggest shakeup in the industry in over a decade. Now, a merger would create the world's biggest copper mine ahead of a wave of demand also from new energy sectors. And on the back of that, Anglo American, of course, that has had spots of troubles over the last couple of years. The smaller miner, who BHP wants to take over, gaining some 11.7%, BHP down 3.6%. So let's talk about Meta, and let's talk about this possible consolidation. Let's bring in Bloomberg's senior executive editor for energy and commodities, Will Kennedy. Will, good morning. I mean, was this expected? It feels like a huge deal that could really change the industrial complex.
Well, we knew that BHP was looking at big acquisitions. We knew that the current CEO, Mike Henry, who's been in the job a couple of years, was open to doing big deals again after a long break in big mining deals. And here we are. Was Anglo expected? Well, it has a very attractive copper business, as you said, but there are problems to getting this deal done. Principally, it's South African assets, which BHP would like Anglo American to divest before any deal. Now, that may be complicated by the opinion of the South African government, which controls the largest shareholder. And then there may be antitrust questions. The Chinese, who buy half the world's copper, are unlikely to be very excited about so much supply being concentrated in one place.
Well, thank you so much. Will Kennedy there with the very latest, of course, on this possible merger. Now, disappointing earnings from Meta have investors on edge ahead of results from Google and Microsoft later today. Meta shares down 14% pre-market after its second quarter sales forecast missed estimates, and it announced plans to spend billions more than expected on AI development.
As we're scaling CapEx and energy expenses for AI, we'll continue focusing on operating the rest of our company efficiently. But realistically, even with shifting many of our existing resources to focus on AI, we'll still grow our investment envelope meaningfully before we make much revenue from some of these new products.
So let's get more on that from Bloomberg's Alex Webb. So, Alex, how much more patience does Meta need actually from investors? And frankly, will they be patient?
Well, the pre-market certainly seems to indicate that a lot of them won't be. It's kind of clear in the current interest rate environment why that's the case. There isn't as much appetite for longer duration stocks. This is a clear signal that this is longer duration than people thought. They are pushing out some earnings in order to invest in AI with the expectation that those earnings will come a little bit further down the line. The CapEx expectation had been for between 35 and 40 billion. Now it's going to be 30 to 37 billion. So that is clearly a big change. And when you add on top of that the fact that revenue is going to be a little bit less than the market had been anticipating, you put those two things together and you end up with this, fairly significant drop in the stock price.
Alex, what does this mean for, again, the rest of the companies? There was a similar miss, I guess, on profits for Tesla, but actually Elon Musk was, able to turn it around because he tried to say, look, deliveries will be quicker than expected and have higher technology. Is there a way for Meta to turn this around?
Yeah, look, this isn't a catastrophe by any expectation, by any measure for Meta. It's just that expectations were extraordinarily high. They've just come out of their sort of so-called year of efficiency. That gave investors a huge amount of confidence in the direction of travel, that this is no longer going to be quite the big spending company that it had been in the past. It is still growing. Perhaps the growth is not quite as much as they had expected, but it is still growing faster than it has done in the past couple of years. It's just that when you have expectations that have grown so much, the price to earnings ratio increased from 16 times forward earnings in about November last year up to 22, 23 times. That huge change means that if you are setting those expectations that you're going to have good cost control, if you change that messaging, you can expect there to be a reevaluation.
Alex, thanks so much. Alex Webb there with the very latest on some of these AI stocks. Now, Norsk Hydro shares have risen more than 20% from a recent low on March 5th. Analysts were divided on first quarter results released yesterday. Now, Citi cites strong aluminium prices driving earnings in the next few months, while Morgan Stanley noted misses in the aluminium and extrusion divisions. Well, Hilde Merete Asheim, the chief executive of Norsk Hydro, joins us now. Thank you so much for joining us. It's a great pleasure also to host you in the studio. I know earnings is always a little bit of a whirlwind because there's so much going on. I believe you're expecting actually some pretty strong demand from building and construction, both in Europe and the US. You're worried a little bit about automotive. How is the oversupply actually working its way through the market?
Well, we had a market which was influenced by weaker demand in building and construction, and also we saw a drop in the demand for electrical vehicles. But still, but the good thing now is that we see a positive sentiment in the market. The B&C, the building and construction, was at its lowest level for many years, and we see now a positive sentiment, very much driven by also the anticipation of that the interest rates are at the highest level and will come down. So we are quite optimistic on the quarters going forward.
So is this actually demand and the trend going forward, or just it's going to stop slowing? And how do you take advantage of that?
Well, I think the building and construction market has been at its lowest level, and with an improvement in terms of lower interest rates, this demand will pick up, particularly in Europe. When it comes to the electrical vehicle market, we have a strong belief that the electrical vehicle market will grow as in the next years. So the drop this quarter was more related to the fact that the Germans have reduced their subsidies to electrical vehicles, and that resulted in quite a drop in the first quarter.
The story of the day, without a doubt, is consolidation among some of the big mining giants. Is there a read across onto what you do if the Anglo-BHP merger goes through? Is it going to spur more consolidation, including in aluminium?
I think that this transaction is very much about copper and the strategic material as copper is in the green shift, and that is where we are in aluminium. These are critical materials to drive the green shift, the energy shift, and it will be interesting to see how this plays out.
I mean, I remember one of my first reporting jobs actually was going to, seeing some of the aluminium coils, and now there's been so much technological advance in making it much more green. Is there so much more demand on aluminium that actually uses less carbon dioxide?
We see a really interesting development in terms of customers wanting to buy a low-carbon aluminium, and we believe that in Europe that the total demand for aluminium by 2030 will be 60% will be in the low-carbon area. And that is where we, as Hydro, want to position ourselves to be the low-carbon producer, both in the primary segment, but also in recycling.
And so how much more expensive, again, does that mean that you go up the value chain? How much more expensive is that kind of aluminium?
Now, Hydro is well positioned in the whole value chain of aluminium, from the mine to the finished product. And we are investing in terms of taking out the carbon, but we also see interest from the market, from the customers, to pay a green premium in terms of for their customers to be able to buy a product which has a low carbon embedded product.
You mentioned the European Central Bank, and it's almost priced in that they cut actually June 6th, but there's so much debate about whether inflation is stickier than expected and what happens after a first cut. How do you see inflation actually behaving in the next couple of months?
Well, I think that the policy making has been strong in the sense of curbing inflation, and that I think is why we see a more optimistic view on the quarters going forward. It still remains to be seen if the interest rates are or have been at the peak and are going down. So I think that the policymakers are very, very concerned about inflation going up again.
I also want to ask you about Russia, because you were one of the first ones actually that stopped buying Russian aluminium after the invasion of Ukraine in 2022. There are now a number of sanctions put in place against Russian assets. Are you confident that actually whatever will happen in aluminium will be efficient?
Yeah, first of all, we welcome very much the sanctioning from the US and UK now, and we will very much support Europe to also take a stand on sanctioning of aluminium. We see that the good thing about the sanctioning now is that there has been a concern and an uncertainty relating to a very high share of Russian metal on the LME, and that has also been a concern about LME being a good reference in terms of the pricing, simply for that reason, and that is not cleared out. So that's good news after the sanctioning last week.
Are you expecting more, sanctions from Europe to come soon?
That is what we would very much support, that Europe now take a stand and put that into the 14 package of sanctioning, which is coming before summer.
You've also really put sustainability at the heart of what you've been trying to do since you've taken over. How's that playing out? What are investors telling you?
We see a lot of traction for our strategic positioning in the sense of being the pioneer in the green aluminium shift. And we see more and more, particularly of the advanced customers, that set their own Scope 3 target and wanting to buy aluminium from Hydro simply because we are producing at a low carbon level and also in a responsible way, all the way from the mine to the finished product with traceability, with transparency. And I believe that Hydro, in that sense, is uniquely positioned in that market going forward.
Thank you so much for making the time to come to the studio today. That was Hilde Merete Asheim, the Chief Executive of Norsk Hydro. Now, we are just getting a little bit more breaking news out of the big news out of commodities today. Anglo America, we understand, is considering the sale of its diamond unit, De Beers. This is according to the Wall Street Journal. This is after, of course, the bigger rival, BHP, has approached Anglo, valuing, I think, the company at around £31 billion. Now, you can see on the back of that, actually, Anglo American. So this is a 1 year. If we do the daily charts, pretty incredible. Anglo American is down some 11%. Again, according to the Wall Street Journal, De Beers has potential buyers, including some Gulf sovereign funds. Much more on this story and full markets. This is Bloomberg.
On the product may read made in the USA, but the sign on the CEO's door often says made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
There was certainly and we talked about this with investors on the 1st of February, a year-on-year decline in net interest income. Absolutely, we called for, and we're seeing that pressure, roll through those businesses.
You see that the top line evolved by 3%. And so what we've now added towards our guidance is basically saying that we are confident that the top line will evolve by at least 2% over the year.
It is very early. Our numbers are in line with what we said. We've seen deposit growth. We've seen lending growth in mortgages and in credit. And so we're pleased with that. But it's one quarter in a longer journey of 3 years.
Well, those are some of the chief executives from Deutsche Bank, Barclays, BNP, giving us their view, of course, on net interest income following the first quarter earnings today. So for expert analysis, let's get straight to also look at exactly, some of these earnings, what they mean going forward. Barclays gaining 4% right now. Deutsche Bank down 0.6%. Let's go straight to Wei Li of BlackRock. Wei, as always, thank you so much for joining us. What you're very good is picking some of these complex ideas, especially on a day like today where earnings is a little bit all over the place, and boiling down to what's important for investors. So we've had the banks, mixed results. We've had this big mining consolidation effort. Like, how should investors look at news flow today?
Hi there, good morning, Francine. Thanks for having me. I think the big picture for earnings is that we have had an incredible start of the year where earnings upside surprises so far have enabled equities to offset the negative impact from rate repricing. So the bar for earnings to continue supporting market sentiment and to continue surprising to the upside has risen. You look at EPS growth expectation for U.S. equity markets, 11% this year, which is higher than the historical average of 7%. So the bar has certainly risen, and that is the lens through which we need to review incoming earning reports. So what has happened so far? You talked about the banks, some of the big tech as well, and this week is very, very busy. I think the fact that so far there has been greater focus on guidance rather than top line misses or beats has indicated to us this is still a very forward-looking market rather than just looking back at what has been delivered. But it's also notable that misses have been more punished than in previous season, again showing that the bar has risen. So earnings is critical in understanding if there is further momentum to go in this equity market.
Wait, there's nothing hugely disappointing actually in what Meta did, but there was a disappointment for investors because they had such high hopes. Does that mean you're recalibrating, I guess, your exposure to some of the Magnificent Seven or AI in general, or is it just about being patient?
Well, if you talk about Magnificent Seven more broadly, there is another name in Magnificent Seven that reported misses in terms of the headline, but actually guided up their expectations, and that was rewarded handsomely earlier in the week, right? So ultimately, we're talking about an environment where when it comes to evaluating the potential for AI, there is greater focus, if you look at how markets have been reacting, on the guidance rather than on the top line misses or beats. This is what we notice in this particular season, which shows to us that this is still a very forward-looking market, and I think there is greater kind of runway for AI adoption to not only kind of play out further in this Magnificent Seven, but beyond the tech sector, in other sectors like healthcare, financials, and industrials as well, which are the sectors that we like. In terms of valuation, people look at how well these names have done, and intuitively they are like, okay, this is too expensive to get in at these levels. But because actually earnings have on aggregate over the last 12, 18 months or so really come through. In terms of valuations, like Magnificent Seven, 90% of their total return the last 12 months can be attributed to earnings coming through. Valuations have not become more expensive versus 1 year ago, and that's the big picture. I think sometimes that goes unnoticed in the context of the meteoric price appreciation. For all these reasons, we still like the tech theme. We think that there is more to play out.
Wei, thank you so much. Wei Li, Global Chief Investment Strategist at BlackRock, stays with us, and we'll talk also a little bit about the data coming out of the U.S. later. This is Bloomberg.
Okay, so you're moving in on me. Quick. Distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right, I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally. We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Now let's get more insight from Wei Li, Managing Director and Global Chief Investment Strategist at BlackRock. Wei, it's a big week. We're talking about earnings away from results. Of course, it's all about the Fed and some of the figures we'll get from the U.S. later.
Yeah, we have the GDP coming up later. Our sense is that we're going to see some slowing. Consumers will still be strong and resilient, but savings buffer has really come down a lot. So there is limit to the extent that consumers continue supporting the broader economy, but we expect some slowing. But it's also important to recognize that there has been exogenous factors like immigration and also bumper fiscal support that has meant that the U.S. economy has been able to run at these levels for such a long period of time. The good news is that it's good for earnings, and the G part of the equation is good, but the bad news is that this spells a bit of a dilemma for the Fed, which is why we have seen meaningful repricing on the rate front. So G good, R less good. On aggregate, the risk assets holding up, but it's a mixed picture.
Wei, thank you, as always, for joining us. Too short a time. We'll have to get you back away from earnings season to also talk about some of the currencies. Wei Li, Managing Director and Global Chief Investment Strategist at BlackRock. Very insightful, as usual. Now, coming up, we speak to Ukraine's finance minister with U.S. aid finally set to arrive after months of delay. So we'll look at that. We'll also look, it's been a big week in terms of news flow. I mean, really a lot of the focus today is not only on some of the banks, for example, Deutsche Bank's investment bankers, have been stepping up, but of course, BHP targeting Anglo America in this big possible merger. This is Bloomberg.
York is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime, but we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or you're advising?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally. We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Well, good morning, everyone, and welcome to Bloomberg UK. I'm Francine Lacqua here in London. Now, desperately needed military equipment is on its way to Ukraine after President Biden signed a national security package, which included $61 billion for Kyiv, capping off a bruising months-long fight with Republicans over the funding. It comes as Europe is under pressure to boost support following fresh criticism of the continent's defense spending by former President Trump during his campaign for a return to the White House. Now, the UK Prime Minister Rishi Sunak met with the German Chancellor in Berlin yesterday, with both leaders eager to show a united European front against Russia. This comes after Britain this week announced its largest aid package for Ukraine since the war began. But will all this new funding be enough for Kyiv to regain momentum in its fight with Russia? I'm delighted to be joined by Serhiy Marchenko, the Finance Minister of Ukraine. Thank you, Minister, for joining us today and such an important week for Ukraine. First of all, can you give me a little bit of a sense of what the money will be used for? So in terms of policies away from the armament, is it for, the lights? Is it for some of the grid from the infrastructure? How will you spend it?
Good morning. Of course, it's the most eagerly awaited support which we received, and we're really grateful for support from House of Commons and Senate, and then Biden signed this as a bill, and we really appreciate the support from the United States. This kind of support mainly will channel towards our military aid, and part of it, 7.8 billion, will be used for budget needs, mainly to cover our social and humanitarian expenses, like salaries for teachers, healthcare facilities, doctors, nurses, and other staff which help us to cover our needs using this support.
And so, Minister, can you give me a sense, first of all, on how quickly you're expecting the actual money to arrive for the budget? And given there's no decrease in hostilities, do you see increased financial needs for this year?
Yes, we see great financial constraint and stress because of additional military expenses which we envisage from our budget. We already increase budget appropriation for Ministry of Defense in Q1 for $4 billion. And it's like the most important item in our budget. That's why, of course, our our deficit for this year will be bigger, but we should figure out the way how to cover it only by relying on our domestic resources.
But have you, with this money, secured all you need to cover the budget gap? And then what is needed for 2025? Can you give us an idea of the actual numbers, Minister?
2025 is very uncertain for us. We're not really to tell you what it will be in the budget figures, because the key question is how long war will be, and it's all which our estimation depend on. That's why now if a situation will be the same as it is in 2024, we run out of $10-12 billion as additional deficit for 2025.
Minister, obviously military support is crucial on the ground. As the finance person, do people, investors also realize, you think, how important the budget is to keep the country going as a whole? And if this money was so difficult to get, how much do you worry about the future?
We have a lot of difficult times in Ukraine. Now situation is very dramatic and dangerous in the battlefield because of lack of necessary military support and ammunitions, artillery shells, etc. But I think that the will of Ukrainian people, determination and resilience help us to prevail very drastic circumstances of this year and as it did before. So I believe that support of our partner can help us to boost necessary energy and to craft this will to fight and to liberate our country.
Can Ukraine get what it needs in terms of money from Europe if the US will not lend you more money?
For this year, we fully covered. What we expected from our partners we received. And now it's a question that we should cover our military expenses by using our own revenues, mobilization, and domestic borrowings. And now we are thinking about 2025 and how to cover our 2025 needs.
Russia has also, we understand, stepped up, of course, attacks on some of the Ukrainian infrastructure and some of the power-generating assets since March. What impact has that had on your economy?
They damaged a lot of our thermal power station, particularly 80% of our thermal generation capacity we lost during last month, and we lost 6 gigawatt of electricity generation.
And that means that you will need more money going forward. Again, I know it's extremely difficult to yeah.
It's true. It's a very sensitive question for us because we have only half a year to prepare our economy and our energy facilities for our next heating season. That's why now we try to attract additional financial resources to speed up this process, to bring necessary technologies in Ukraine to help us to cover this gap, to prepare our energy generations for next heating season.
Minister, I know this is maybe not the right time to talk about debt restructuring, but can you tell us whether you've started the talks on restructuring?
I would prefer not to answer this question until the right moment we will be ready to make necessary statements because it's a very sensitive question for us.
Do you foresee maybe a situation where Ukraine would not need a restructuring?
Again, any comments from me for these particular points create additional expectations, and I would like to avoid answering this question. Sorry.
Okay, Minister, I understand. So I hope to meet you in person when you are ready to talk about it, maybe after you talk to some of the other counterparties. As always, thank you so much. It's a great pleasure to speak to you, the Finance Minister of Ukraine, Sergei Marchenko there. Now, coming up, we're joined by the Chief Executive of HIV pharmaceutical company, ViiV, which is working towards longer-acting treatments and prevention. This is Bloomberg.
Adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
This is Bloomberg.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority. The Markets Countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
The revenue and EPS that you see is really performance across the board. So this was the first quarter that both our biopharma business and our oncology business exceeded $5 billion in revenue, and our rare disease business was over $2 billion in revenue. And when you look at the growth rates, oncology growing at 26%, cardiovascular medicines business growing at 23%, respiratory business growing at 17%, and rare disease at 16%. So I think one of the key strengths of AstraZeneca is this diversity of portfolio. So it's not one or two medicines that's really driving the growth. It's a very broad base of 12 plus blockbuster medicines that's driving the growth. If you look from a geographic standpoint as well, it's, again, emerging markets have been growing really strong. The U.S. is really strong. Europe is really strong. So it's really across the board that we see the strength in the performance. But what's really exciting, you mentioned the investor event, is the portfolio that we have. So it's really the pipeline and how that pipeline is coming to maturity, and we're continuing to invest in that pipeline. I think that's what's really exciting.
Well, that was the AstraZeneca Chief Financial Officer on the company's profit gain in the first quarter, buoyed by demand for its cancer drugs. Now, the UN says the AIDS epidemic can be ended by 2030. Almost 30 million people across the world accessed treatment for HIV in 2022. That's according to data from UNAIDS. Now, globally, some 39 people were living with HIV in 2022, with AIDS still leading to over 600,000 deaths a year. Now, at the forefront of the effort behind innovation, research and development of treatment is a UK-based company, ViiV. Owned by pharma giant GlaxoSmithKline, ViiV is moving towards longer-acting treatments and prevention. Well, we're delighted to be joined today by Deborah Waterhouse, the Chief Executive of ViiV. Deborah, thank you so much and welcome. of course, to our studio. I mean, it struck me when we were doing some research that actually we don't talk about HIV as we used to in the past. And I don't know whether that's worrying in terms of how the markets price you, how investors look at some of the patents that may expire. Is there a misunderstanding about this epidemic?
So thanks for having me, Francine. So HIV is still a significant public health issue. 39 million people live with HIV, 1.3 million new infections per year. And we have come a long way through this epidemic to ensuring that people living with HIV can live a normal life. Back in 1988, if you were diagnosed with HIV, your life expectancy was about 18 months. Today, if you're diagnosed and you take your medication, you can live as long as someone who isn't living with HIV, and yet there is still a lot more to do in terms of treatment, prevention, and of course, cure, which is what we all dream of. So this is a very important therapy area. It's growing, and there's a significant amount of opportunity. So I think shareholders and analysts externally see this as a really significant opportunity for ViiV Healthcare and, of course, GSK.
I mean, they're basically dolutegravir is going off patent towards the end of the decade. And so you're moving into longer acting, basically, options. Can you give us an overview of some of the treatments that you think will work in the future better, or where you can become more nimble?
Yeah, so the pharmaceutical industry works, as you say, that you lose the patent of older medicines, and then you have to innovate to reinvent your business every 10 years or so. We've got a very strong pipeline, and we've also got some great medicines that we've just launched. So they're all long-acting. So at the moment, we've launched Cabenuva, which is for long-acting treatment. It's administered every 2 months. We've then got a long-acting injectable for the prevention of HIV, again administered every 2 months. But actually then, as I look to the future, what patients who we're very, very closely connected to tell us is that they love long-acting, but they'd like longer gaps between administration. And so in our pipeline, we have an every 4-month treatment and prevention, which we'll be launching in the next 2 or 3 years. And then after that, we've got an every 6-month treatment and prevention, which will launch towards the end of the decade, as long as our R&D goes according to plan. So there's a real pipeline, strong pipeline, meeting patient needs, which will deliver great financial return for shareholders, but also will help us really tackle the epidemic.
And Deborah, this is because of stigma? Or is it just because it's easier to get a treatment for a longer term?
So it's two things. Stigma is still very pervasive in this therapy area. And people living with HIV tell us that they haven't told their friends and family that they're living with HIV, and they are scared every day that somebody will find their medication or see them taking their tablet every day. We know that people struggle to remember to take their medicine every day. And if you miss a dose, actually you're at risk of the virus mutating, and then you become resistant to your medication. And then finally, it's a very stigmatizing disease. People self-stigmatize, and they hate taking that tablet every day because it reminds them of the worst day of their life, which is the day that they were diagnosed. And so that stigma plus unmet need, wanting great adherence, wanting people to make HIV a smaller part of their life, is why these medicines are going to be liberating.
There may be also some misunderstanding about vaccines, because some of your competitors are actually working on HIV vaccines. This is something that GSK at the moment isn't.
So what we're working on is what we call ultra-long acting. So we've got a pathway in prevention that we hope will take us to having a medicine that you can take every 12 months. It's a shot again, and it means that you will be protected against acquiring HIV for 12 months. And actually, you go and have a flu jab every year, actually. So in a sense, you're getting into a rhythm of regular prevention that lasts over the long term.
There's a lot of focus on UN/AIDS, and they've put some very clear goals in place. Do you think those are achievable?
I actually do think they're achievable. They're achievable through partnership between community, pharmaceutical companies, NGOs, and of course governments, where the epidemic rages across the world, but particularly in sub-Saharan Africa. But actually, I do believe that we, with our long-acting injectables, both for prevention and for treatment, will make a big impact, actually, on the level of new infections that happen, and that we can make a significant contribution to ending the epidemic, which we all long for.
Deborah, I mean, one of the questions that we were also trying to think about is that, is there competition is maybe the wrong word, but after COVID, after there are a number of things that worrying, is funding away from things like AIDS to other places a concern that you have?
I mean, we always get concerned about funding moving away, but actually what we're seeing is that PEPFAR's been given the money that it needs to continue its work, that governments are still willing to pay for innovative medicines, and that the epidemic is a global public health issue. So actually, it's a place where we all come together, collaborate, partner, and do our best work to try and end the epidemic. But it's also a great area to be in, as we said before, from a shareholder perspective. So actually, our company has grown rapidly over the last few years. We've contributed significantly to GSK's success. You've seen GSK grow very strongly over the last few years. And so payers are willing to pay. NGOs and bigger supranationals are willing to fund medicine into the least developed countries. And so I think there's still enough funding to help us get to the place we dream of, which is ending the epidemic.
There is a little bit of a gap between market expectations or investor expectations and your internal expectations, right? How difficult is it to bridge that?
I mean, the investor and analyst expectations are actually getting closer to ours as they see our science unfolding. So I guess what we need to do is show them through our performance in the market today, which is actually very, very strong with our long-acting injectables, and the milestones that we're meeting with our pipeline. As they unfold, I think confidence is growing, and I believe